The IRS has just dropped some new tax updates for 2026. What does that mean to you? Welcome to MoneyChisme. I am Violeta, and today we are going to be talking about some of the tax updates that the IRS has just announced and how is it going to affect us. Now, this tax update is part of their annual inflation adjustment, and they will apply when you file your tax return in 2027. This update has higher deductions, new credit amounts, and much, much more that can impact how much dinero you get to keep. And as a Latina wealth builder, we need to know these things so that we can plan and take full advantage of them. The first update is that the standard deductions that you can take has increased a little bit. You can now do 32,200 if you're married, 24,150 if you are the head of household, and 16,100 if you are single. This means that you get to reduce your tax liability, which means less taxes that you have to pay and more money back in your pocket that stays in your pocket for you to invest or whatever you want to use that money for. Now, we also got an increase in the tax bracket thresholds that you have to meet in order to go to the next percentage of how much you owe in taxes, which is a good thing because I know some people even refuse a promotion because they don't want to hit that next tax bracket. So now the thresholds have increased, meaning that if you've been waiting or refusing a promotion or whatever, a pay increase because you don't want to hit that next percentage, then this is good news. For example, if you're making over 50,400, you fall in the 22% tax bracket. This is if you're single. It is 100,800 if you're making over that. If you are married, filing jointly. But in order to reach the next tax bracket of 24,000, then you have to make over 105 and 700 or 200,011 400 if you are married filing jointly. Now you can see these tax brackets. I'll link them in the description so you could see where you fall in these brackets. We also saw a small increase for the earned income credit if you have more than three children. It went up to $8,231, which is about $200 increase. That means, that's more money back in your pocket when you go file that tax return. Now, with that extra savings, then you can put that into a 529 for their college fund or even an UTMA account, UTMA account for investing for them. And you can find all that. I'll link that down below as well. Now, one of the bigger updates increases is for the employer provided childcare tax credit. It reduces the tax liability of the employer because it offers them a tax credit. Now, one of the bigger boosts that we saw with this update is with the employer provided childcare tax credit. This is a credit that employers can get for helping out with childcare expenses. There is some criteria that they do have to meet, but they can get some credit for providing this assistance to their employees. Now it was that a credit of 150,000, but now it got a big boost to 500,000. It can be 600,000 if the employer is an eligible small business, which is great if you are a business owner because you get to help your employees with childcare expenses and get a tax credit as well. So it's a win win. Now, for those who contribute to a health flexible spending account, this also got a small increase. Now, this is a account that you can put your pre-tax money into it which means that then you bring down your tax liability and pay less taxes on whatever's left over, right? And with the funds from this account, you can use it for healthcare expenses like therapy or, vision or dental. There's a list of what applies, but this got a small boost as well. It has increased to 3,400. So those are the main updates that I wanted to share with you because it is important to understand these updates. And again, the link to the IRS website where you can see all these updates is going to be linked down in the description. But what now? What now that we see these updates, what's your next step? Again, as a Latina wealth builder, one of the ways that you build wealth is finding ways to reduce your tax liability so that way you pay less taxes, which means you get to keep more of your money in your pocket to either invest it, take that family vacation, or whatever you need that money for. For me, of course, it's going to be to invest in real estate. Understanding how these updates are going to affect you is important. And the good thing is that these updates came out now, and we have all next year and the rest of this year to start planning what you want to do for next year. So that way, when you file in 2027, you have maximized all these credits and deductions that apply to you. So definitely look at your W 4, what's your tax bracket, and even talk to your CPA. If you don't have one, go talk to one. I also do have an episode that I'm going to link down below where I spoke to a CPA for tax planning and strategy. Having a good tax strategy and planning for what you're going to spend in 2026 is going to ensure that you maximize these benefits. I am definitely going to sit down and do my homework and make sure that I plan for 2026 and also see what I can do, how I can use these in my businesses, in my real estate business and, with MoneyChisme and all that, how I can maximize my benefits and my deductions and all that and credits. So, what are your thoughts on these new tax updates? Let me know down in the comments if you're watching this on YouTube, or hit me up on Instagram. Let me know what actually applies to you. What are you more excited about? How are you going to maximize some of these in 2026? Other than that, that's it for this episode, and I will see you in the next one. Bye.